is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. We have with us Jason Seitz of Ticket Rewards. Jason, if you can launch your slides and kick off, I'm ready.
All right, all set?
Yep, we see your slides. You're good to go.
Okay, thank you. All right, so let's see. We started off with getting all cleaned up to go out, and then we had a drink, and then we had something on the brain, and so now let's go out and have some fun. All right, so we're going to talk about Ticket Rewards, live entertainment as a service, and who are we and what do we do? We are basically a ticketing company, or we have big relationships in live entertainment, and basically we work directly with presenters, promoters, sports teams, and venues directly, and have strategic inventory about $500 million worth of ticket that we get consigned. Because what we do is we actually work directly with brands, and we're the behind the scene partner of HBO Max or Celebrity Cruises, Hearst, and many others. And what we do is we actually give them access to tickets, whether it's a pre-sale, an incentive that we do, or a loyalty program that we do. And then the consumer actually gets a big benefit of getting access to these tickets, so they get a lot of loyalty back to the brands. And then the consumer will go to the events, and just doing this as quickly, but goes to the events, has a great time, and then they actually have an emotional connection back to the brand, whether it's HBO, Celebrity Cruises, San Francisco Chronicle, and I'll give you some case studies of how this has worked. And then their engagement and retention goes up. So it's a lower cost of acquisition, a lower cost of retention, and in the end, lower churn for the bunch of the companies that we're working with. So in the case study of like Celebrity Cruises, they're trying to keep people engaged in between their cruises. The number one email that they send out to their Captain's Club members is the live entertainment emails that we send. They actually get 40% higher open rates and 20% higher click-through rates when they're giving these. So also, while we were building our business, because we are fully functioning ticketing company already, we ran into HBO Max, and who highlighted that churn is the killer in the business, and they're looking for ways to keep people on their platform. So we've done a 6-month pilot with HBO or with Max, and they are going to be moving forward with us with their loyalty program. So here's our big opportunity. It's very big in the sense that brands are looking for ways to keep people engaged and retained. The cost behind it is high. We actually have a low-cost solution for them. The live entertainment space is totally untapped. And then the live entertainment space is a bunch of small businesses that we know we can put in one platform. Little tidbits to know about retention and growth. Just a 5% increase in retention can actually increase profits by 25 to 95%. The cost of acquisition is 5 to 7 times higher, more expensive than actually retaining consumers. And we do an incredible job of retaining the consumers they already have. And more loyal consumers spend 67% more on rather than new ones. So our solution has been a mobile-first, co-branded, white-label redemption platform for live entertainment with multiple ways to do it. We actually have about 4 different revenue streams that we actually actively are already doing. As I mentioned, we have about $500 million worth of consigned inventory, from your likes of Andre Bocelli to New Kids on the Block. Whether you're Yankees or a Red Sox fan, we actually work with all of them. We also then have access to $1 billion plus of marketplace inventory with over 35,000 live events. It seamlessly integrates into programs. It's very easy, based off of push notifications or emails. It drives engagement, retention, and brand loyalty. And then the best part is that we get feedback from all the brands that we work with, that consumers are saying thank you back to the brand. Thank you to Celebrity Cruises for getting me out to this event. This is a very big marketplace in the ticketing space. We know this space very well. We are passionate about live entertainment. But the interesting thing is the loyalty and reward space in itself is even larger. So we are working with enterprise brands, the Fortune 500 companies, and when we get them on a phone call, they're looking for ways to integrate us. Here's our current client base. These are brands that you know: United Mileage Plus, HBO Max, Celebrity Cruises, Hearst, many different programs that we do with the newspapers to keep their subscribers activated. We work in the vacation timeshare space, and then a bunch of companies that you're probably unaware of. We also have a marketplace of our own in which we're moving about $2 million worth of tickets already. We finished off the year so strong, we actually made a profit. Our active pipeline, which we need help because there's so many different companies out there, because we have industry agnostic for our approach. These are already companies that we're talking to, and the good news is Fandium actually just came on board. Travelzoo's a company that has over 19 million subscribers in the United States. One Acre Flowers is starting in 2 weeks. Go-To Foods, which is your Jamba Juice, Whataburger, they're all in negotiations right now to start by the beginning of July. And then we have a massive opportunity with Lyft that I believe we're having a phone call while I am on this phone right now about starting in March to be the provider of tickets for them and their 45 million transactions that they have a month. If we're able to help them change their share by 1%, it helps them get about $1 billion worth of value to their company. We have a bunch of other leads that we have, but to be honest, we're not touching enough companies right now. And that's why we're doing a raise, because we can reach out to the nonprofit world. Fandium did that. They're working with a number of nonprofits that basically used our incentive tool to raise more funds for their nonprofit. Here's some customer success stories. Hearst Corporation, we started giving them deals in different marketplaces. It went so well because 50% of the people were actively engaged in our product were people they thought were going to unsubscribe. So they went from just doing 1 email to now doing 4 emails a month with our products. And we have high variability of working with Broadway shows to concerts to your favorite sports teams. United Smiles Plus did a test in October of 2024, and now we are now the provider of their exclusive products for all of their live entertainment needs that are in 9 of their hub markets, and we're trying to convince them to do about 30 different markets. So what is live entertainment as a service? So we actually have created a product in which someone like HBO Max or a subscription service can get $25 of tickets every single month. It expires at the end of the month, so it comes up again, and they get another 25 the following month. It helps because now they have something to leverage when someone's trying to unsubscribe. It works on 30,000 events. As I mentioned, we have a lot of inventory to sell that's both consigned and founded through multiple marketplaces that we work with. We fulfill on the customer service side and the fulfillment side, so it's seamless for a brand we work with. We have a customizable redemption platform. We'll show you here in a second. And also we have our own inventory management system that can be integrated with multiple third parties. So we can actually integrate theme parks to tours and attractions, and then later on with travel. We also have, with that platform, the ability to give data back of things what people are searching for. So we actually can give information about consumers who are coming on the platform for the brands we work with. All of this is already launched. All of this is currently already working. This is what our platform currently looks like, in which we'll be adding even more. If you see here real quick, we have deals on top of deals. So our negotiated rates, we might give someone 35% off on a show, and then you can still take $25 off with your codes. How do we make money? Well, number one, we have subscriptions basis. We typically doing a flat fee for a certain size of database, or we're working with someone giving us 3 cents per member per month for someone that has 100,000 members or less. It's an annual contract. We are getting these signed starting here in 2025. We also do just a traditional model for selling of tickets, in which we make up towards to 40% margin on those tickets. Typically, that's something that we do with a newspaper who's looking to engage their audience with different deals in the market. We have an incentive card. This incentive card is a $25 code that can be redeemed for anything on the site that we sell for $5 or less, depending on volume. This is actually an area that we're starting to get really, really strong retention on for our own business. We just got feedback from a holiday promotion in which someone was offering an Amazon card, I believe a $10 Amazon card or a $25 ticket reward card, and they selected us 67% of the time. So we beat Amazon. Loved hearing that yesterday. We're also started getting people advertising on our platform. We're cross-pollinating with packaging. So we have Darden Restaurants who recently bought a spot to be our exclusive provider of gift cards for packaging with live events. Our revenues, we're growing incredibly fast, but we also need to get our pipeline of more companies in the door. So we're actually raising to get our sales and marketing functions fully on board, because we currently are a staff of only 7, and we do have to procure most of the inventory we have and then fulfill it. 2025 is going to be a huge year of growth, of bringing on new clients, as well as a lot of testing, and then obviously bringing on new employees. We are going to be quickly into a very strong EBITDA by 2027. Here's our leadership team. It's very strong with diverse different backgrounds, with myself being more on a creative basis of selling of tickets or just general retail products. Cole Dunlop is our co-founder as well, who has actually started and exited within companies. Paul Bosch is also a huge industry expert in the ticketing space, working with the founding companies partners for Broadway.com, and also helped with EVG, which is a company we potentially could be selling to and scaling that business to $1 billion business. Kristen, as well, is a key member of our staff who's basically putting this all together behind the scenes for us. So appreciate everything she does for us. Our expertise is in live entertainment, but it's basically the know-how that most companies don't know how to do. And United Airlines Mileage Plus was surprised to find us in the way that we're able to get them inventory way before it's on sale and get it to their members. And that's what we do really well. We put these strategic partnerships together because we know this business. Our technical development and product innovation is actually, there isn't any company does the kind of business we do with the kind of platform that we have. And we're basically customer centric in our design. We make it so it's very easy for people to say yes. Our staff has also done a number of different startups and actually a number of different exits as well. Our investment opportunity is a $2 million round. We've already got $320K committed with a $10 million cap on a safe note. Our mostly what we're going to be spending this on is sales and marketing, going to shows, going to events where we can get additional new leads. It's interesting. We work within the nonprofit space to Fortune 500 companies, the gift card space to retail products to subscription businesses. The other thing we'll be doing this year is also adding new products like tours, attractions, theme parks, and then eventually travel, which is obviously an even bigger subset of this area. Our exit strategy is going to be acquisition. While we've been doing this raise, one of our strategic partners has actually given us a term sheet potential to acquire us. It's actually higher than what we're looking for on the cap, $10 million cap currently. We also got great feedback from one of our clients who purchases with us already, and they basically said, once you scale, we would like to buy you. Also, there's large companies as an entertainment benefits group, AEG, which is a competitor to the Live Nation, and Blackhawk. If you ever go buy a gift card or Incom, you're buying them through a facilitator, which is Blackhawk and Incom, which are multi-billion-dollar companies. On here, 10 Capital did a great job of just highlighting some other companies in this space that have already evaluations that are multiples of 6 to 8, which in the ticketing space, it can actually be quite larger if we're doing it in our SaaS business. And that's my 10-minute pitch. So one other thing I do want to show you, just so you can actually see, is this is what our emails look like when people are sending something out. San Francisco Chronicle trusts us to actually write their content for us. HBO Max, this is when they were giving $25 every month to their subscribers. We have worked with Oprah as well, and this worked for Hearst in trying to get people to sign up for Oprah Daily Insider.
Great job, Jason. Thanks so much. Vadim, what's your first question?
Where are you based?
Austin, Texas.
Austin, Texas. So all of you, the vast majority of your clients is remote sales.
Every single one of them are, yes. So we are very, very good into getting into big companies and finding the right person to talk to look at our programs. Most of our team is distributed though. So we have people in New York, South Carolina, Austin, Texas, Chicago. I actually am sitting in the UK right now because my wife got a great opportunity for a job.
Nola, what's your first question?
Ticket rewards. You're a reseller of tickets, or do you originate the tickets?
So we do both. We actually work directly with the venue. So it'd be a first time sale of a ticket versus it being bought and then resold. We're basically finding alternative channels, and that's why they give us sometimes 50% off their tickets so they could sell it earlier. And these shows are, I'll just give you an idea. In San Francisco, we moved 2,500 tickets for Hamilton over the holidays, over the last 4 weeks of the year. And we got those 6 months prior, and then brands were able to leverage that opportunity to get these tickets for a good value. And then later on in the process, that show was sold out. And so we were the only one to really have that inventory.
I remember I went to that show and I thought the ticketing was weird.
The one thing about our space is that most people don't know how to get a ticket, which is a big opportunity. And whenever you see an opportunity where distribution models are sort of not defined. The consumer doesn't know where to get it. And we push something in front of somebody, they say, thank you for sending this. I might not go, but they say, thank you for letting me know. I mean, it's pretty incredible, the open rates of our emails. HBO Max, which has incredible content that we all love to watch and stream. We actually had higher open rates with our product than their own because of the stuff that people were looking to do.
How do you find the events yourselves? How do you, what's your origination?
We're deeply
Cool.
rooted. My company, the company I used to work for was Travel Zoo. If you're familiar with that company, I started their live entertainment space from scratch. So I became your Uber connected company and live person in live entertainment. We've hired other people who are also just as connected. And so because we're offering basically free marketing to these venues, these shows, these sports teams, they'll give us inventory at a net rate or a rate that's very affordable that we can package up and make a margin on. Or basically put it into a platform that when you redeem $25, it looks like you're getting an amazing deal when we're still also making money on it as well.
Clever.
And it's
So
fun. It's a fun industry to be in. So
because you get to go to all the events if you want to.
used to, yes. I got 2 kids now. So
Okay. So you stay home and stream. And what is I mean, I've seen this come through to me from my Vistana ownership. And yeah, so that's like the Westin Marriott conglomeration of vacation homes.
Uh-huh.
And they're now selling events like this. Is that through you?
we've actually talked to them before. We are in negotiations with them potentially to do more for what they have. So our ideology for it is that if you can take care of somebody at home as much as you can when they're traveling, you'll have a lifetime customer. So we are breaking into the hotel vacation area. We work with Vacation Village Resorts. Whenever they send out an email, it's the most open email that they have, both for things to do where their properties are, as well as things to do at home.
Okay,
We need more people out there knocking on doors is what we need.
okay, so that's what you're raising the money for?
Yes, because it's actually, once we get somebody engaged, it's a high likelihood that they're probably going to be a partner of ours. One thing is it's a larger sales cycle for these enterprise brands. So as an example, we've been talking to Lyft for about 6 months right now, and they're looking to launch in about 4.
We have a few questions from the audience. What's the customer acquisition cost?
Our time right now. So for us, it's basically finding the right person in the door. So it's the cost of actually hiring somebody to go out and get it. We do have three other outside sales reps, and it's costs us about 20% of whatever they bring in.
What's your standard contract size?
Standard contract size is a good question. So we can do anything. So the standard contract for us is between 25,000, and then we have about 4 deals right now that are in the 7 figures that we're waiting on. On the distribution side, we're basically making off each distribution partner, say San Francisco Chronicle or Houston Chronicle. We're making about $100,000 per newspaper we're working with.
And what's the time to receive value on average? From the time they start the product till they really get value, how long is that?
Almost immediate. The first test we did, first email we did with Max showed them that they have high open rates. They have high engagement rates. The people like the product. The tests we did with Hearst, in which they actually took every person in and looked for if these people were going to unsubscribe or stay as a subscriber. Within 2 months, they could tell that these are people who are not active in their database at all.
What's your profit margins?
Currently, are about 36% is our margin. In the SaaS model, it's about 80%. So that's where we're putting a lot of time and effort into.
And how do you incentivize the ticket provider?
The ticket provider, well, we're getting them an audience that they can't reach. So it's a very easy conversation. So AEG, a big partner, came to us for AR Rahman because they saw what Andre Bocelli is doing with us, and then Hans Zimmer, and then we're going to get Ed Sheeran shortly because they can't get into these audiences, and we do it for free for them.
Right. If you lose connection because of competition, what happens?
If we lose
Connections.
inventory? Connections. Oh, so interesting enough, the platform still works because we work in the marketplace and secondary market, which gives about, $10 billion worth of inventory at any given time. So
Okay.
inventory will always be available.
Are your current customers paying full price now? If not, when will they convert?
Some are paying full price right now. And I mean, we have people paying $5 for $25 codes. We've done a number of tests. We believe, most people are coming in at about 75% of what we pitched them in the beginning. So it's a good rate that we're getting for it. So
Final question of the session. Are all employees only receiving equity as compensation?
are all employees receiving equity? No, they're getting paid currently.
Okay, sounds good. All right, we're at the end of our time. Jason, great presentation. Noah, Vadim, great questions. We need to move on to our last segment here, which is going to be Term Sheets 101. So let me put my slides up here right quick and walk through this in short order. And then we're going to move over to breakout rooms. And appreciate everybody voting on the last session that we had there. Let me move this here. Let's see. There it is. Okay. So those in the audience that are investors, many people are new at this. And so they're looking at term sheets, wondering what some of these terms mean. And so just wanted to walk through some of the key term sheets that people ask me about from time to time. If you have any questions, put it in that chat box. But some of the key terms that we often come up with that we want to talk about are things like, if you understand some of the financial parameters to look for in a term sheet, it will help you. What type of security is this? A safe note, convertible note, price round? How much is the investment amount that they're asking for overall? And then also, what is pre-money valuation? For those who are unfamiliar with startups, we use the pre-money world rather than share price. And just to give you the equation of ownership, pre-money plus investment equals post-money. Investor will get the investment divided by post-money as a % ownership stake. Sometimes you do see price per share and price rounds, and you want to look at safe notes and convertible notes as to what are the conversion triggers for those. Make sure there are conversion triggers in the term sheet is what I found. And then sometimes there are dividends as well. So some of the key things to look for there to help you. Term sheets are either slanted toward the founder or they're slanted toward the investor, and we sometimes try hard to balance it between the two. But if you look at a term sheet, these are some symbols that tell you that you're looking at a founder-friendly term sheet. There is no expiration date on the investment offer. The option pool comes out of both the investor's portion as well as the founder's portion. Typically in the Series A, you set aside 15% of the shares to pay the employees. Well, it goes up to 20 if you go to later stage. And so somebody has to pay for that. Who is paying for that? There is no confidentiality agreement. The founders are free to talk to anyone about the deal. There is no liquidation preference for the investors. That means it's a very friendly founder sheet. And finally, the startup does not pay the investor legal fees. If you were to invert all of this, you would have an investor-friendly term sheet. So next time you look at a term sheet, you might want to think about which of these things are at play in the one that you're looking at. When you're going into a term sheet, I always say it's not a formula, it's a negotiation. I always think about this because valuation, while there may be metrics and there be standards for how you calculate valuation, ultimately it is a negotiation between the two. Liquidation preferences are also negotiated. Sometimes they're in, sometimes they're not. If the investor doesn't believe the company is at the valuation that is being asked, well, a liquidation preference can sometimes balance things out. Investor or founder share rights can also be balanced out as well. And you can also include redemption rights. We'll talk about that more here in a moment. One of the most common tools out there is the convertible note. Basically, it's a debt instrument that converts to equity later. And it's valuable because it's a rolling close. You take the note out, go talk to investors as a startup, and they sign the check, you sign the note, the money goes into the business the next day. You can actually stack up several notes, one on top of the other. If you stack up too much, you will be undergoing greater dilution than you think. So you have to be careful about that. And so you also have to look that you don't raise too much money on convertible debt, as if when you get to Series A, there will be venture capital and institutional investors that will expect a certain amount of the deal in order to come in. If you've given out too much already with convertible notes, it may be hard to bring them in. Also, it's very good for seed rounds and bridge rounds. You don't necessarily need a lead investor to go into it. It avoids setting the price. In the very early stages, it's very hard to find a lead investor because there's just not enough information to make a decision about this. And it can keep the cap table simple. When the note matures, it will convert, or if there's a follow-on qualified pricing round, it will convert at that point as well. One thing about convertible notes is that they typically don't have any protective provisions, very little about, sometimes they have information rights, but not anything with boards or the other things that you may want to go in there. The Angel Capital Association came out with a model convertible note term sheet this past year that put many of those investor rights back into it. I recommend you look at that. The valuation is not fixed. What you have instead is a valuation cap. That means that the valuation will not be higher than that number. And if it converts it without a qualified pricing round, it will convert at the valuation cap. The other disadvantage of a convertible note is that you don't get any qualified small business stock tax benefits, 1202, 1245, and the like, because you must be in a equity deal for 5 years before QSBS comes into play. But it is a great way to start off an investment round when you don't have anything else. I brought up the convertible note because we have a new convertible note ourselves. We call the 3X and 3. It basically gives the investor at their sole discretion a redemption right at year 3. At year 3, I found in most deals it's very clear which way this deal is going. We're continuing up the equity track, or we're now going sideways. If we're going sideways and it doesn't look like the rocket you thought it was going to be, investors can redeem their investment for 3x the amount. You put 50K in, you get 150K out, and it moves to a revenue share agreement to give you a path out of the deal. For those who are interested, we're rebuilding our 3X and 3 group. We've had this in the past and have had several deals. We have more companies coming to our program now that are very interested in 3X and 3. So if you're interested in that, give me a call. Let me know, and I'll be glad to add you to the list. There's no cost to join. You just get to review deals that are interested in that. In most of these deals, they take 250, 500K, but no more. We have to limit how much they can take. So there's limited amount of space. But if you're interested in that, we have a lot of startup interest in 3X and 3. Many of them want to actually have you take your shares out, convert out of the deal because they want the equity back for themselves. So with that, let's go ahead and we're going to close out our session now, the formal session, and we're going to move into breakout rooms. We're going to put breakout rooms up on the screen here. Kat will take us into it. If you want to talk to me, I'll be in a breakout room and be glad to talk to you about 3X and 3, or as joining the 10 Capital program. And our other founders will be in their room. Welcome you to go join and talk to them as well. And so with that, I think we got the breakout rooms here on the screen. You guys can just click on that button and click join for the one you want to go to, and we'll see you there. That wraps up our program today. We want to thank you guys for joining us. We'll send out the recording and the details from this event afterwards, and we'll be back next month with another investor education session. Thank you so much, Vadim and Nola, for great questions today. Appreciate you joining us. Looking forward to joining you in your sessions in the future. With that, we're going ahead and close it out and join the breakout room. Thanks so much.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.